So what Microsoft I've heard is starting to do is to go to all of their customers, and then Microsoft saying, "Hey, we have all of your security compliance, all your data infrastructure already on Azure and our systems. For $400 to $500 per user, you can get access to Copilot." And all that means in their world is there's now a bot that will follow you around in all different instances of Microsoft that you have. The customer that I talked to that was offered that was very much on the position of like, I don't see how us spending $500 to $600 per user is returning any ROI for us.
OpenAI has announced a new role.
Oh man, this is hilarious. Yeah, this is true Inception now.
Yeah, 100%. Because when these tools first came out, this was like the number one role that was going to die. So the role is content strategist for chatgpt.com.
So hold on. So I'm a content generating statistical machine and I'm hiring a content strategist. So does that mean I'm not trusting my own product to do that? Or like what's the angle here?
What did we say a few weeks ago? The vibe coders vibing the vibe coders. Coding the vibe coders. Here we are.
And Bytes.
We are live. Martin has morphed himself into someone else again this week. How's it going, Mike?
I'm good. How are you guys doing?
We are all good, my friend.
Terrific. So where's Martin 2 again? Is he again traveling the world?
I spoke to him yesterday. And he has been in Ibiza for 5 years. And I think the people that have been to Ibiza partying will understand, 5 days. And for people that have been to Ibiza and partied, you will know what 5 days of Ibiza partying does to you.
Yeah, if you're
I don't know
careful,
where Ibiza is.
Ibiza.
Ibiza.
Oh.
You have to say it like an American. Now I know what you're talking about.
Yeah. Yeah, so it's like a party island in Europe, on the Balearic Islands, Spanish island. And you basically go there to lose yourself for a few days and escape reality. It's like a little island where nothing else exists outside of the world when you're on there. And you just do whatever you do in Ibiza, and then come home. So I think Martin's in a hole right now.
He might need a week off to recover from Ibiza.
Yeah, he's gone to a different part of Spain to get some relaxation, and then I think he'll be back next week. So, yeah, sounds good. So, all right, let's go. Today we're going to be discussing, there was an interesting deal between Microsoft and a large general contractor. Interestingly, the article I found is in dollars, but I know with the same contractor, they'd also done something over here in the UK as well. So, interesting times. We'll talk about, we just saw as we were going live, around about an hour ago, that Firmus AI company within the construction tech scene had been acquired by Bluebeam. So we can have a little quick look into that. We'll talk about Autodesk's latest reports. I know there's a lot of positive things to say about that. We have call-ins from Ari Bleemer from OneCrew, which is a business management platform for the paving industry. They just raised a $7.5 million seed round. And then we have Britton from BuildFactory. He was actually on Bricks and Bytes not so long ago. Just come out of, well, we'll find out his not so secret exit from stealth mode. And they've just raised a $3.3 million pre-seed round for Prefabrication marketplace. And then if we get there, there's been some updates on the Figma and ongoing IPO drama, and OpenAI, as we had discussed a few weeks ago about their roles within the AEC space, have announced another exciting role for people if you're interested. So stay tuned. And of course, we have Mike with us. So let's do this. First up, Balfour Beatty. So actually, Mike and Dustin, you two wanted to talk about this. So the headline of the news is Balfour Beatty invests nearly $10 million in Microsoft AI. Okay, so I think it is perhaps part of their UK initiative here, because the subheadline says, as part of the initiative, the London-based builder will pilot an artificial intelligence agent on a Scotland infrastructure project. Yeah, Balfour Beatty is running a pilot of the tech on a £185 million A9 project in Scotland. It's a road improvement job where the firm is upgrading a single lane into 2 lanes. Wow. Constructing 4 new bridges and delivering new side roads together with various junction upgrades. Woo. The AI agent, which focuses on inspection and test plans, identifies common issues that include incorrect or outdated templates reaching technical experts. As a result, the agent enhances the consistency, efficiency, and quality of ITPs, according to Balfour Beatty. So what does this deal with Microsoft and Balfour Beatty mean for construction tech AI? Who wants to go first?
I have popcorn. I'll let you guys go.
Dustin, you go.
Well, I find it fascinating that the number is so large and the commitment is so large to Microsoft's AI Copilot, where I don't know what they expect is going to be truly insightful that Microsoft's going to bring to the table, that they couldn't at least test other AI specific solutions. But what is the unique insight that Microsoft brings to construction? Now, if they had said something like it's like more to do with the international logistics and the uniqueness of Balfour Beatty, that they need a company of the global scale, that would have been one thing. But the fact that they're testing it on one project means it's more project specific. And I just expect that there could be more solutions that at least are focused on solving project problems. In general, I see a lot of companies that are paying obscene amounts of money for a brand name rather than finding the best value, which is kind of crazy, but that happens all the time. I also find it fascinating that like Balfour Beatty has like some of their tech stack is very, very outdated that the model has to even interact with. Some of their solutions are not in the cloud at all. They use a lot of desktop tools. So like, why aren't you guys working on how you're generating your own internal data? At least the US. So it seems like you're trying to leapfrog and have models interact with things, but your infrastructure isn't positioned for you to completely take advantage of that. I just can't believe the number when you're talking about signing I think it was a $7.6 million contract. I don't know how you get there.
£7.2 million, $9.6 million.
$10 million contract.
Yes.
I don't know how you get there. I just can't see it.
So I've heard from another large general contractor that Microsoft offered him a similar deal. So what Microsoft I've heard is starting to do is to go to all of their customers. And when you look at a large GC, their biggest tech spend is usually Microsoft. And then Microsoft saying, hey, we have all of your security compliance, all your data infrastructure already on Azure and our systems. For $400 to $500 per user, you can get access to Copilot. And all that means in their world is there's now a bot that will follow you around in all different instances of Microsoft that you have. That could be in Docs, that could be in Outlook, that could be in Teams, that could be in Dynamics. The customer that I talked to that was offered that was very much on the position of like, I don't see how us spending $500 to $600 per user is returning any ROI for us. So I looked up Balfour Beatty has 27,000 employees. So that's where like there's like a $350 per user fee. And if it's over 3 years, is it $100 a user? That's how you sold into Balfour Beatty. Their model is a little different than other GCs. As Dustin mentioned, they were, when I was at Autodesk, they were still at very, very early BIM 360 platform tools that were desktop based. So I'm curious to see how it plays out. But I think the bigger piece is like Microsoft is continuing to push into construction stack. And I'm wondering, like, do they become the security layer? Does Procore Autodesk become the project management layer? And then all these other tools like Trunk tools and DocuCrunch become like workflow agent layers. And how does that value actually accrete up to the contract that they're signing with the owner? Like there's not a lot of fee structure that's available to capture to pay more for more software. And does this Microsoft fee then pull away from cost that Balfour would have used to pay for other software solutions? It's very interesting. I'm curious to see how that maps out. And it's like, does that then remove Balfour from target list for project management AI tools?
I mean, it kind of, yeah, I guess it does make sense because they'd be penetrating the company with like a simple, as you describe it, like a bot that works inside of their original systems. There's no implementation, little implementation, onboarding and IT to go through. They're already there, and then they expand into the other suites or areas within construction. It kind of makes sense.
And I'd be
What you're
curious to
saying,
see how
Mike.
much the consulting structure is, where they're like, hey, we'll create a form for you to structure down your conflict issues that you have on this infrastructure project. We'll help you automate it, which will be like a form filter that's through Microsoft Dynamics that's going to like do something. It's kind of what Palantir is doing for government. We're seeing Palantir pitch a lot to manufacturing clients that we're talking to. Very, very similar on that model.
Patrick,
I think
what's
you
your
just said,
views
let
on-
me jump in here, Mike. So I think you just said the magic word, actually. So I was WhatsApping the other day with another founder, and I was telling him, I mean, what do you think why OpenAI is building a consulting arm in order to challenge Palantir? Because they know exactly what their margins and their moats and their narratives are going to be, why they want to get into hardware too. And the big bucks can be made once you wrap your software into consulting projects. The only part of the industry that isn't getting that memo is the venture capital industry. But customers and client and suppliers actually know how to make that kind of money.
Yeah, it's very fascinating. We'll say the Palantir pitches, like Benioff was just on 20 VC last week talking about this. He goes, I was amazed by what the price of Palantir is charging for the same services that we charge for. And Palantir can charge that because they have this forward deploy engineering model, but it's valuable to customers if you can return the outcome. Palantir signed a $100 million 10-year contract with a nuclear fusion startup. It's funny, like we're having, it's just interesting because we're having conversations with OEMs where we're pitching them 7-figure deals, and it's resonating with them from a value creation perspective. And they all have AI initiatives, and this is tied to the AI initiative bucket. And for them to spend $2 to $3 million on an AI bucket so they can tell the street that they're spending $2 to $3 million on an AI bucket, it actually increases their market cap and the return on investment from that perspective. It's
100% what's happening. And look,
it's
I
very
mean, it's funny.
interesting.
It's funny coming from Benioff, right? I mean, Benioff has what's his market cap? 220, 250. That's
It just went down
coincidentally
7%.
How much is it now?
It just went down. They reported earnings yesterday. Very underwhelming.
But 200 something.
Yeah, 220 billion.
Yeah. So that's coincidentally
230
the
billion.
market size of Salesforce implementation consultants.
Yep.
Amazing.
It's
Interesting times.
It's interesting because the industry, if you look at the last 20 years, Benioff created software as a service. And the idea was to get rid of these customizations so that we could lower the overall cost. And now this is actually moving backwards to, hey, we're going to be we have some core product offerings, but we're a custom dev shop, and moving back to an SAP or Oracle model where, yeah, sure. And we'll make this configurable to you.
Look, that market never went away. It's just that the big software players, because they wanted to be valued on high gross margin, high recurring revenue, they didn't take that revenue that went off the table, and they just left it basically to Accenture, SAP consultants, Salesforce consultants, etc. Why would you want to leave that on the table if you can just as well build a Palantir type market cap? I mean, amazing company, but explain me that multiple on that business. Difficult, and yet they are wrapping it actually in projects. So I think everybody's realizing that there's a big price to go after. Plus, if your software in itself has relatively short lifetimes, that's the best way to wrap it into, in my opinion.
Mike, quick point. Yeah, when you were speaking to a general contractor, and they mentioned, I think what you were saying was that there was this notion of them paying roughly $500 per user, which didn't make sense.
Yeah, so it was pretty much like turning on Copilot, right? So if you think about the infrastructure of Microsoft has a huge partnership with OpenAI. So for a very risk-adverse company to evaluate using AI LLMs, but they don't know what LLM stands for in most cases, for them to go with Microsoft, that's already connected to their entire infrastructure, knowing that the data is going to be continually stored in their world. It is a de-risk for them in a sense, as opposed to going to a startup and saying like, hey, use all my data to train. And you're starting to see these reports come out of like Turner and Skanska, where they're like, we're building our own things. We're not relying on tech companies. It's just a recurring theme that's popping up. And Microsoft, because of their footprint in general contractors and their security inside of general contractors, has a huge leg up. but the price point has to make sense. Like PlanGrid's $1,000 a seat a year back in the day. So paying 600 to 700 for an AI chatbot is a harder pill to swallow. I don't know what the price point is that makes sense. There hasn't been a lot of proven ROI with these chatbots.
I would say this is going to be a growing trend based on conversations I have with Microsoft actually penetrating the industry. I think we'll definitely see more of it in the large GC space. Do anyone have any more on this, or should we go to Firmus? Mike, you have 5 minutes, right?
Yeah, I gotta hop at at 5.
He's got a really important call, guys, so he has to go. More important than this. Okay, interesting. So yeah, as I mentioned, roughly 1 hour before we went live, this press release came out from Nemetscheck announcing the acquisition of Firmus AI. And it says, let me just scan this very quickly. Firmus is a pioneer in pre-construction design review and risk analysis, leverages AI to analyze 2D PDF drawings for design-related risk, thereby transforming construction workflows. It's a strongly growing company. The acquisition aims to integrate Firmus's advanced drawing-first AI capabilities, including early identification of design-related risks, cross-discipline coordination issues, and scope gaps, as well as face-to-face drawing set comparisons and priority-based issue reporting directly into Bluebeam's standard review and markup workflows. Patrick, you know a little bit about Nemetscheck and Bluebeam. Bluebeam, maybe? I'm putting words in, assuming here, but yeah, tell us what's your thoughts on this?
I mean, it's very fresh to me too. I guess, who in the industry doesn't know Bluebeam? It's a de facto tool when you want to do spatial coordination. I'm sure Bluebeam has different growth vectors that have to do with AI or other sorts of automation on, for example, identifying scope gaps or identifying omissions, identifying errors. And so when a platform like that has a decision to make how to expand the feature set, comes down to make or buy, looks to me like they saw a good buy opportunity here in Firmus to plug it right into the Bluebeam ecosystem. Bluebeam has a vast distribution advantage, so similar to other incumbents in that regard. So if you can make it a plug-and-play integration, and the calculation can become that customers quickly access it and quickly pay more for an additional feature, it can be an instant business case from an M&A perspective. So that's a quick raw reaction.
Mm-hmm.
I'm just looking at, I wasn't very familiar with Firmus, but I thought Bluebeam did a lot of this already. So I'm curious on like what the actual like feature set growth is for Bluebeam, like the top
AI
sort of like,
capability.
but like Firmus AI matching is just overlaying two different sets of documents on top of each other, which I know Bluebeam does. PlanGrid's done that. I wonder what like the unique value prop on top of that is. They have this tool called AI Review, which is just tracking changes.
Does it check specs, specifications, and other documents? Sorry, Patrick.
Oh, sorry, Owen. Sorry, that was lag.
I was saying that from my understanding, when we spoke to Firmus, this is at least a year ago now. And I don't know, Mike, if this is what you intended to say, but they had the capabilities to also check other construction documents, not just drawings. So it was going through like if you had like a project which had X amount of documents on, it was able to compare a drawing with all other data and information within the full suite, not just a drawing on top of another drawing to compare changes and risks and differences.
Yeah, there's that. And then one of the things that stood out when we chatted with Firmus years back, so not recently, they were working at the time on relatively early and ahead of others on proper segmentation of the 3D models so that you can actually query it relatively easily, very, very similar to a database. Now that seems a little bit more run of the mill, but they were ahead of the curve here a little bit. So perhaps that was something that they had refined further and that was attractive. So that at least went on in my mind when I heard the news.
Dustin, do you have any views on this?
I have never come across Firmus before.
Yeah.
Go ahead.
I was going to say, I think, Firmus, early stage company, been going 6 years. I think founded in 2019. Is this an early acquisition? Like, is it quite early, and I mean they've been going for 6 years, but my understanding was that Firmus were not like not in a kind of for lack of a better term, established phase. I don't know. Do acquisitions happen at this stage? Does it make maybe it made sense for the founders and so on and so forth? Any thoughts on that?
I think that if you read the press release, they say they're supposed to be in mid single digit revenue by end of 26, which means they're in low single digit revenue at best right now. So being founded in 2019, that's highly problematic. They probably could not raise the next round of capital. And so they looked for a place to at least give investors back some of their money and sunset the company and find it a hole. I think this was purely, they just wanted to find a home, and Bluebeam thought there was some value in the technology or the people that they could bring on board through the acquisition.
Fair enough.
Can't think of anything else.
Mike,
You gotta hop, guys.
I'm conscious of this very important call.
Bye, Mike.
Yeah. I'll
You
talk
go,
to you
man.
guys soon. Thanks for
Thanks for
having me.
coming. Yeah.
Thanks,
See you
Mike.
soon.
See you soon.
Yeah.
Yeah.
Do we know what this call is, or are we not allowed to say?
He said he could not move, unequivocally could not move it. So it's very important. Must be a new customer.
We could spread rumors now if we want. Now that Mike's off.
It's Bluebeam's acquisition department.
Oh,
Yes.
oh wow. Nice.
Okay.
No, look, I mean, Owen, to your point, right? I think every proper exit should count as a success. It's very difficult for the founders, that is, not necessarily for the investors. Of course, the investors know what they sign up for, and I know that what I do, I need home runs in the end. But part of the game is that if I don't achieve my home run, to help the founders in other ways achieve, let's say the next level or the level B of success that is most appropriate. And so this one should be considered a success. When you've been hard at work for 6+ years on building a business in an industry that is as difficult as ours, selling and finding distribution advantage, building a product, etc., it's certainly not easy. Then Firmus also, let's not forget the context. I mean, Israeli founders started out of Israel, targeting the US. We all know what happened October 7th in 2023. I'm sure they also had implications in their friends, family circle, etc. So just taking all of the context, I think it's something, congratulations, guys.
Yes.
Glad you found a good home.
Well
stated.
Hope you made some money. And, in 2 years, you can then build the next company of your dreams. So I guess that's also a cool way to look at it.
That's really important to call out, Patrick. I think that everyone wants the home runs, but just building a business that someone wants to acquire is really hard. Most companies go to zero. It's just absolutely shut down. So congratulations, team.
Yes. I guess we'll find out a little bit more about that in the near future.
And by the way, their co-founder and CTO has already, I guess now's a good time as any to plug that. So Ruby, he already founded a new company called Ladder out of New York. Go give him a follow. I think he's a cool dude. Definitely following his work on my end.
Yeah, same. I interacted with him a few times. He came up with some cool suggestions for the podcast. So Ruby, thanks for that. Appreciate it. Okay, shall we go on to some exciting news from Autodesk?
Yes.
Latest earnings report. Quarter ending July 31.
Oh, I thought you were going to give us some juicy gossip about what they're going to present at Autodesk University in terms of API pricing or terms and conditions updates next week.
Sounds like you're looking for something specific.
Just, fishing.
Yeah, I don't have the
Are you going to Autodesk University?
I've never been. It's maybe one time. Are you?
I will be there for the entire week.
Nice.
Very, very interested. They are releasing their quote unquote. Yeah, they're releasing their new estimating tool. So very excited to see it.
Okay.
Okay, you're going to be front row and center for the announcement, yeah?
Do they have a way of preventing you from doing business development at Autodesk University? I'm curious. I actually don't know.
I'll say no, but I hope I don't get in trouble. At the end of the day, I want to partner with Autodesk. I would like to integrate with their solutions, and we are going to have mutually shared customers. So I don't think it's in anyone's interest if they say, no, you have to just use Autodesk, because I think people would find that quite offensive. So, yeah. Autodesk spans everything, and it's impossible not to compete with them. And the customer should have the choice of, do they want the best of breed, or they just want a lot of product surface area?
To your note, Patrick, I have had some stories from founders in the industry who are building products which may be competing with Autodesk, which were given very strategically placed booths at the conference not in the favor of the startup, in favor of the incumbent.
You mean like next to the bathrooms, something like that?
Yeah. The sign facing the wrong way, like the company logo is like printed back to front and upside down. And not
next to the
that
bathrooms is probably a good location.
Yeah, for sure. Yeah.
I have a story. So like when I was doing Building Connected, and this is to Procore's credit, actually, we were going to attend Groundbreak as an exhibitor. And so I get a call from Paul. Paul, he wasn't the CFO at the time. But he's quite up there. He was doing business development. And he goes, Dustin, I know you're coming here. We have a good relationship. We had just finished an integration with them. He goes, just so you know, we're releasing our quote unquote Procore Precon. And I'm like, okay. And he goes, but we want you to attend, and we just believe that customers should choose doing the best of breed. And to their credit, they've always stuck with that policy, because they have a lot of tools that compete with tools in their solution that do integrate. And so I do think that if Autodesk took a hard stance that, no, we're not going to provide that same level of service and same level of optionality, I think that would be a real big detriment to them. Because they're looking at, hey, how do we get everyone adopted on the on ACC as a platform? And whatever tools you want to plug into the platform, they're kind of up to you. But their view, I think their view, or at least in my opinion, their view should be, we want people consolidating on an ACC platform, and to do that, they might not necessarily use every product in ACC. I think that's would be the right philosophy. So I think that if they're really isolating startups, I think it's kind of comical.
From a US competition law perspective, Dustin, would there even be at some point some antitrust discussions if you blocked certain software to interact with Autodesk? Is that going to be an issue at all?
I think there could be, but then who's going to take the mantle and make that case and actually try to run with it? Like, none of the startup community actually has the dollar values to do it. No one's going to put up the fight.
Shall we talk about the dollars? So from
July, there was an earnings release, you said.
The Benjamins?
So this is the report from quarter ending July 31st. Just a little bit of commentary. Report highlights significant growth in both financial and operational metrics, driven by increased subscription revenue and strategic business initiatives. So total net revenue. By the way, feel free to provide some more forensic comments than just these headlines that I will give you. But let's go. Total net revenue was 1,763 million, reflecting a growth of 1,505 million. In billion, 1.7 billion, reflecting growth of 1.5 billion.
Yep.
In the same period last year, and driven by increased subscription revenue. Gross profit 1.604 billion, up from 1.365 billion in the prior year, indicating improved cost management and higher revenue. Income from operations, 444 million compared to 343 million in the previous year. Enhanced operational efficiency. Net income, 313 million, an increase from 282 million, highlighting effective cost control and revenue growth. Wow, these are great, these little comments. Basic net income per share, $1.47, up from $1.31, reflecting the company's improved profitability. And final one, diluted net income per share, $1.46 compared to $1.30 in the prior year, indicating stronger earnings performance. Hey, Dustin, you're an Autodesk shareholder, right? How does it feel?
I mean, I was 2 quarters too early, where I thought that this would start being picked up by the street. But if you had followed this podcast, not that we give financial advice, you would have made a lot of money. So I did very well on that earnings. And not that we give financial advice, but I'm fortunate enough to have both managers now, and I was talking to them, and they're like, this company has the next 12 to 24 months of a very rosy outlook. Like I really, really like where they are. There is going to be things that get in their way, but I think that they are a while out from making any sort of impact into the Autodesk momentum and in opportunity right now. So yeah, it was really, really great earnings report. For the first time actually on the conference call, I actually thought that they did a very good job of like selling the vision. I don't think that they typically sell the vision to the street. And I thought that they actually like really sold the vision of what they're trying to do. Now, there's always a difference between selling the vision, which some CEOs are great at, and then there's no material behind it, or you have like, you're doing really great, and then they're not really good at selling it. So those two things also got me excited. Which
Have you noticed a change in that regard in terms of the narrative and the interaction with the capital markets since the activist investors got involved?
Well, so they've done a lot of things that, I mean, even their marketing right now. Remember when we talked about their God commercial? I really think that that was more targeted at making this more of a household name to get more of the quote unquote hood investors aware of this stock as an AI company. Like, I think they're actually being quite intentional. And when they talk about cost controls, they let go of 10% of their company, and they're not really backfilling or hiring. Like, so there is a lot. That's the activists. They're like, you're holding your spend flat. We're going to see this revenue growth, and then all of a sudden, you're going to see it become a cash flow machine. They have the ability and the infrastructure to push products through their channel. So I can see a lot of revenue growth while relatively maintaining costs consistent. So increased profitability looks good.
I mean, just to put that into perspective, I'm just checking it. As of today, they're actually valued at below 10x of this year's forecasted revenue. So it's not even a 12-month forecast. So it's not an ARR multiple, etc. It's actually sub 10x on the forecast for this fiscal year. So, I mean, many people would call that fairly priced, to say the least. So they are forecasting around 7 billion for this fiscal year. Certainly,
Yeah, and they're gonna cash flow over 2 billion, and they're what, a $60 billion market cap. So now we're talking 30x for an AI company on free cash flow, or 30x. Maybe it's 25 if they get to 2.5. So it's fairly priced with, I think, optionality only to the upside.
Yeah, I mean, free cash flow on the whole year, are they actually giving a guidance? Yeah, 2.2 is their guidance.
Yeah, so it's sub 30 on a company that's has a lot of AI products coming online, and it has a really good story.
It's a great asset. I remember, Dustin, the discussion you and I had with Martin over WhatsApp, why NVIDIA is worth more than some G7 countries, and free cash flow is the answer.
Yeah. Free cash flow is definitely answer. G70 companies have negative, and NVIDIA has 200 billion.
Yeah. And then there was one other thing, Owen, in that release that I found, I just found interesting. I don't think it's earth shattering or anything, but to the point, we've been pointing out on several occasions how Autodesk is also very, very strongly making a push within the AEC industry with ACC products, and the impact that can have on Procore, etc. You see it in the numbers. So the disproportionate portion of their growth actually comes from the AEC segment within Autodesk. So that one grew almost a quarter, while the other segments are at 13% and 4% growth respectively. So disproportionate growth actually coming from the ACC push.
That's been my thesis the whole time, is they finally have a product viable to compete with Procore. And I actually haven't validated this. I think Procore, though, added something like only 176 net new customers in their previous quarter, some minuscule amount relative to their total customer base. I guarantee Autodesk blew that out of the water if they list it.
They also announced the PayApps acquisition for the first time in any report. Apparently, Bricks and Bytes spoke about that 6 months ago. So just saying. And there's also this. By the way, that's not new news. That was released I think, Patrick, we spoke there with you 18 months ago or so.
Yeah, exactly. I think they put that out there back then.
Yeah,
Yeah.
but it says on here.
They bought GC Pay. Was that it?
No, it says in this latest release here, acquired Pay Apps Limited to enhance its construction
Oh, Pay
related
Apps.
payment
Oh, maybe
management.
that was
Procore
still in
bought
closing.
GC Pay.
GC Pay was that Procore?
I think Procore bought.
What does this mean? Maybe you can help me. Sales channels. Direct sales channels have seen significant growth with 1.087 billion in net revenue.
That means you got rid of your resellers and you're trying to sell directly to the customers, and part of your resellers are not your friends anymore.
I thought maybe they unlocked some new hacky way of selling their product. Well, maybe it is just getting rid of your resellers.
Well, that was a muscle that Autodesk didn't have outside of like their EBA team until they made the acquisitions basically of Building Connected and PlanGrid. And then all of a sudden they had a huge sales team to go after mid-market and SMBs, where before they were much more reliant on, this is domestically, they're always going to use channels internationally because it's really hard to stand up small resellers in smaller markets. But with those two huge pushes, now they had the infrastructure to essentially take over all customer sales. So I'm sure there's still a few VARs in the system, but all the small ones are going to get smoked. And the VARs that are going to stay on are doing much more of the consulting work for implementation and training and less of the actual, hey, this is our pricing and packaging.
You're exactly right. That's been ongoing for at least a year, if not longer. And behind the scenes, they've been renegotiating with several of them and just outright, telling others, "Hey, we're going to go into a different direction." Also in international markets, by the way.
Oh, really?
Yeah, Australia, for example.
Australia's a decent sized market. It's about the size of Canada, so yeah, that makes sense.
So yeah, big changes coming. Autodesk really trying to streamline a lot. Yep.
Should we talk about something else that's exciting, but probably for the wrong reasons? I guess a month or so ago, we talked about Figma. And the headline here now I have in front of me is Figma's shares slump as earnings miss lofty post-IPO expectations. What is
I remember
going
you
on?
gave me some very sensational quotes as like some thumbnails for that episode.
Oh yeah, we had to change it a few times actually. We couldn't quite get the wording right because I was thinking, a little bit harsh.
Yeah, it was a bit out of context, but okay, I'll stand to it. But look, the fact of the matter is, existing shareholders got $33. Figma boomed in the days after to what, like 110, 120 even, something like that. Yeah. Yesterday they released earnings.
And was what per share?
Let me look at this.
The earnings were actually good. It's just that they didn't meet expectations. So that was the issue. And so now, yesterday they closed at 67, 65, I think. And now pre-market, when I checked before the show, it was 57 actually, which coming from high just 2 months ago, you can look at it as disappointing. But you can look at it as even more disappointing when you're an existing shareholder and it's still up 70% from the price you got from your bankers.
Yeah, so just quickly, so there's a chart that I have here. Sorry, Dustin, quick so people understand the context of Patrick's comments.
Yeah, go ahead.
3rd of August, when the IPO, so before then it was listed at $33, right? The existing shareholders bought, what did you say, Patrick, for $33? Existing. And then it IPO'd at 115? No, 85,
no, it IPO'd for 33, but it popped to 115-ish. Yeah.
Yeah, to 115, fine. And then within, I don't know, a week, it was down to 80. Then within a month, it's down to 68. And now, as you said, closed yesterday, down to 58 or something. 50.
Yeah, that's pre-market right now. Yep. And that's still 70% up.
Well, I'm loving this because I love Figma. And now it's starting to become actually priced in something I can feel comfortable around starting to get into.
No financial advice.
No financial advice. I'm not saying buy it today. But I've been watching it gradually go down and I wanted to get through this earnings report. And yes, 17%. What is it? $27 billion market cap now. I think that they're a truly amazing, amazing company. And they'll be back.
Well, I really appreciate.
I just
So-
don't think that. I think the value is still a little rich.
But hey, I mean, Dylan, the CEO, spoke about his new
Yeah,
AI
I was going to
initiatives.
ask about this. What are they doing
Yeah.
with AI?
So, I mean, of course, when you're a company as important and as generational as Figma, it would be a bit silly not to talk about that. And of course, you get asked. I read the transcript from the earnings call earlier. It was, mostly framed as agentic, and so they have a product coming out and released that basically attacks Lovable. So, I mean, that was foreseeable. I mean, why wouldn't they? And a few other features. And interestingly, the CFO preempted it and said, look, guys, don't expect of us to maintain our 90% gross margin. We will see a hit on the gross margin as the inference costs go up. Read the transcript if you don't believe me. It's actually in there. They're on the record. But they see it as a midterm and long-term investment. And what I also liked is Field, the CEO, is still speaking about big bets. So when you read the transcript, he will say in multiple instances, we're ready to take big bets. We have 1.6 billion in the bank, and it will not always be used for M&A. So don't expect us to go M&A. Rather expect us to take big product bets. And those will certainly be around the AI vector, is my guess. I mean, why would they leave the AI wrapped application development and web development to others if Figma could just as well do it and have it within an authoring tool? To me, that's a fairly good expansion.
Yeah, I think one of the things that's unique about Figma is even with their outstanding growth, they're actually cash flow positive and their net income, I think they're GAAP positive.
I wouldn't be surprised. Yeah, I would be surprised if they weren't.
Yeah, which is amazing because you're not actually being diluted when you're buying in here.
Yeah, it was 30 million in the second quarter.
Yeah, so you're not going to see that stock being diluted 5 or 10% year over year, which is typically what you also have to expect on some of these high growth companies.
I mean, just for context, I don't think Procore has had positive net income since it IPO'd.
And they've had like a quarter where they were like positive, like 4 million or so. Yeah.
Okay.
A minuscule amount. And that's because of, on a GAAP basis, they're still doing a lot of stock compensations, which offset the positive.
So now some controversial, just I'm throwing that out there. So if Figma knows that the inference cost will drive down its gross margin, just imagine for a moment the scenario in which Figma actually generates 100, 200, 300, 400 million more additional ARR due to its AI prototyping tools and takes that market partially away from Lovable, etc. Why would they continue to not have their own foundational model? Just saying, right? Why do you pay upstream? Bottleneck is GPUs.
you have to go capture that gross margin. Otherwise, business model. It's like you have to use, first of all, that there's market demand. And after you prove market demand, you have to improve your gross margins.
Yeah. And just think about it, Dustin, right? So bottleneck is GPUs. And it used to be AI researchers, but we're grooming an entire talent base in the big fours that can come out and rebuild a generic foundation model. That's not edge research anymore.
Spooky times.
And there's no one now that has more data to train a foundational model on design systems than Figma. Yeah. They don't have to pay for data. They're not going to. And they have the ability, because all the designers use Figma, to even make those models more contextual for individual organizations, right?
Yeah.
You create, like a lot of people don't understand is if you're building software as a service, you hopefully create a design system for your company so that everything you're designing already has been engineered on the front end to be reusable components. So you're not redesigning every button, every color, every sort of system or pattern. And all of those can be ingested by any sort of AI model to say, hey, we want you to prototype, use our design systems. Here's what we want it to accomplish. And now it's pulling from your design system library and configuring it so that it is actually what your application, it feels like native to your application. Where right now, I mean, I was playing around with ChatGPT because I was sending our designers some things I want them to work on for prototypes for stuff we might build in like 6 to 12 months. But you get results like this has nothing to look, it has nothing, it doesn't feel like an edify system. And I know Figma is working on this. So I love that it can go that deep where it's going to be able to interact with the design systems established within an organization and use those design systems to make prototypes that now not only is it hopefully eventually spitting out quality code that can actually be used, but the quality code is even more usable because it's in the design system framework.
Yeah, Patrick, I know you're asking, I don't know if there's a rhetorical question about the foundational models, but why wouldn't they build a foundational model if they have all that data?
Hold on. Are you asking me what I asked you?
Okay, I thought you was like asking it a bit facetiously, maybe like.
No, I mean, you're right. Of course, it was meant as a rhetorical question because I can't think of any good reason when I think about it in terms of bottlenecks, right? So there's a GPU bottleneck, okay, but imagine that gets resolved. I mean, NVIDIA has every incentive to make sure there's enough supply and then capacity in the market, because in the end, they are the ones actually benefiting the most from this gold rush. AI researchers. It's already not a bottleneck anymore. It's only for the total edge, but Figma doesn't need the total edge. Figma has the bathtub that it is, and can make do with good enough foundation models, because it finds other ways to actually generate value out of it and stickiness and moats. And so for that, we're grooming a big talent pool in the US and elsewhere. So what is really the bottleneck of doing it? Well, it's going to be probably cash. It's going to cost you 10 digit. They have 1.6 lying around. Do you think they can raise 5 in the public market if that's the story? Yeah, sure. I mean, really, it's just prioritization in my opinion. And if the CFO finds that the gross margin compressed too much and they make a strong internal business case that they can, I mean, look, Dario from Anthropic argued, hey, I'm spending $1 billion and within 12 months, I'm making $2 billion out of it. I mean, maybe Figma has the same internal logic, right? and then that whole margin sits with you.
Yeah, but he did compare it to pharmaceuticals. I'm throwing a fishing rod at you.
That is a horrible comparison. It's absolutely
yeah.
horrible.
What did you think, Dustin? I'm curious.
I mean, that is just an atrocious comparison. Because you just completely ignore the patent protection where that product is protected for the next 20 years or longer. So that's a tough one.
I mean, what's truly the lifetime, right? Is it 12 months?
Yeah. That's also, it completely ignores the lifetime value. Right? What is the lifetime value? Well, you also have to factor in the gross margins because he just basically said, oh, we invest 10 and then we realized 200 million in revenue. Okay, well, how much did you actually make on that 200? If it's minus 40...
I think Anthropic is probably better, but if you're the wrapper of Anthropic, I mean, look, they'll figure it out. But as I said, like OpenAI is building a consulting arm to compete with Palantir. I mean, there's an obvious reason.
Well, just to tease, maybe we'll reveal this at the end, but OpenAI has announced a new role.
Oh man, this is hilarious. Yeah, this is true Inception now.
Yeah, 100%. Because when these tools first came out, this was like the #1 role that was going to die. So the role is content strategist for chatgpt.com. Do you want to have a go at guessing the salaries like we did last time?
Listen, beefy salary. I know what it is.
You know it.
But it's still less than
the upper bound.
It's less than the head of construction?
No, more, actually more. Well, that's interesting. Yeah. Like, so, yeah, more than the site manager role. No wonder no one goes into construction. Yeah, 310 to 393. Plus, don't forget, a few weeks ago, we discussed the $1.5 million bonus that you would get on top of this.
Very good. So hold on. So I'm a content generating statistical machine and I'm hiring a content strategist. So does that mean I'm not trusting my own product to do that? Or like, what's the angle here?
What did we say a few weeks ago? The vibe coders vibing the vibe coders. Coding the vibe coders. Here we are.
So walk me through this.
I think you could make it a case is that these models aren't great at coming up with an overarching strategy to pursue. But if you give them the direction and have them work down certain swim lanes, like, hey, this is your objective, like build me content to do these things, that maybe that is the position that they're trying to hire for, someone to develop. So at best, they should probably relabel like what they're looking for, is someone to develop like, okay, here is how we're going to develop content in these lanes, and the objectives of these things are to do X, Y, and Z.
Yeah. Here's some. I agree, Dustin. I think the strategy point is important because I suppose these things are good at producing content, but strategizing and understanding context and the overall picture of the business and so on and so forth is maybe a little bit trickier. These are the roles and responsibilities. I'll read off a couple. Own the content strategy for chatgpt.com, aligning it to growth, acquisition, and product goals. This is an interesting one. Create, write, and edit high-quality content, from landing pages to guides to campaigns that drive traffic and adoption.
Okay, that sounds like an IC role.
Hey, we have Ari here. Maybe we can revisit this a little bit later. Let's go with Ari. Hey, Ari, can you hear us?
He's on Ibiza.
I can.
There we
Can you
go.
hear me?
Hey,
How's
Ari.
it going?
Doing
Can you hear
well.
us,
How are
Ari?
you guys
You're all
doing?
good. Yeah, great, man. Thanks for coming.
Yeah, absolutely. Thanks for having me.
Cool. So Ari, you're here because you recently, OneCrew, you can tell us about that in a little bit of, in a little while. You just raised a $7.5 million seed round to build software for paving crews. It's quite interesting. And I think that all of us here are interested in this notion of targeting a quite narrow within the field of the AEC space. So we're interested to hear a little bit more about that. But Ari, yeah, tell us a little bit more about the product. Like, what are you guys building?
Yeah, absolutely. Series A, actually.
Series A. Sorry about that.
On the round. Yeah, no worries at all. But yeah, so at OneCrew, we are building an all-in-one platform for paving contractors who heavily rooted in estimating, and then this covers everything connecting the office to the field as well as to customers. So through the sales process into operations, and then also on the financial side, doing your job costing, invoicing, payments as well.
Mm-hmm. Dustin, what are you going to ask?
Yeah. Ari, when you say paving crews, are you talking about like a lot of heavy civil contractors?
Great question. Yeah. So a lot of heavy civil contractors, the majority of our customers today do primarily commercial work, a little bit of residential work as well, and then a fair bit of municipal and DOT work as well. And as we continue to grow the business and grow the customer base, we're serving more and more municipal and DOT contractors as well.
Okay, so it's fair to say going after the HCSS market?
That is fair to say. Yeah, HCSS and B2W both have strong positions in the market.
Those are amazing companies, but both those pieces of software need to be shot behind the tool shed. Like they are so old.
Yeah, we feel very similarly. They're I mean, the products themselves are incredibly functional, but in today's world, there's a lot of opportunity for improvement there.
What's the inspiration for this?
Yeah, I was going to say, why you go for it. That was a similar question to I have inspiration and why paving?
Yeah. So my background prior to this, I studied computer engineering, then moved over into the business side and spent some time in consulting. And while there, spent time in utilities and some other kind of not necessarily heavy civil industries, but adjacent, working with engineers that were out in the field, and just started to get a sense of and experience the software that a lot of folks were working with. And so started digging in a lot more. At the time, Procore had fairly recently IPO'd. There were a lot of field service softwares raising huge rounds, huge amounts of money. And Procore was being talked about as vertical SaaS for construction, which in my mind is like saying something can be vertical SaaS for healthcare. There's no one solution for the construction industry. It's way too broad. There's so many sub industries within that. And so I started digging in a lot more to broadly construction, and looking for, where are there heavily underserved customers today? So field services, I think pretty crowded. And I think that there's some really great solutions in the field services space. On the general contractor side, a lot of solutions out there, and I think some of them are quite good. What we found is that kind of in this in-between area where you've got project-based contractors, and not necessarily service-based, but project-based contractors, where estimating is a massively critical part of the process, where getting their costs right, and it might be slim margins, it might be healthy margins, but getting their costs right as they're going into jobs is just really critical. Paving was kind of a quintessential example of that, where we saw what was on the market today. We saw a lot of interest just from talking to a lot of people in the industry, saw a ton of interest in a great software solution and in better solutions, but from a supply and demand perspective, the demand was surely there, the supply was not. And so we kind of narrowed in on paving, and then over the past few years, as we've built OneCrew, have only gained confidence and gotten more and more bullish about the opportunity specifically in this market, and how we can create opportunity within the market by delivering a better solution. So, I think one of the things that we see a fair bit is folks thinking about software maybe to solve one specific problem, not necessarily hoping that it does X, Y, and Z things. And as we're able to deliver more and more, I think it also allows people to understand the breadth of problems that a great platform can help a business with.
Harry, first of all, congratulations. Great
Thank you.
choice on the market too. I love horizontal construction, especially when it comes, very infrastructure related, paving, subset of that. I think you made a very good timeless pick there. What's your strategy with the DOTs?
Yeah, it's something that we're continuing to dig into right now. So there's
Nice pun.
there's a couple of angles of this, right? So there is the angle of going to the DOTs. That's not at the top of our list. For the most part, like we will continue to focus on serving the contractor themselves, and because so much DOT work is bid out and done through private contractors, that is the focus for now. In terms of kind of opportunity around DOTs, what we see is, for instance, looking at HESS, B2W, some of these larger solutions in the space, there is some connection of pulling some of that information in today's world with AI, with the massive amount of analysis that you can do on a very quick basis. We see a ton of opportunity to present a better solution to contractors serving DOTs that heavily leverages historicals to help them bid in a really effective way there. So obviously we're not necessarily, it's not part of our near-term plan to go and replace all the software that is being used on the DOT side. I think that is, it's a tall mountain to climb, but at a minimum, what we want to do is allow a contractor and enable a contractor to bid really efficiently and effectively against DOT projects.
Ari, I'm sure you know that heavy bid allows them to automatically submit to the DOTs.
Yeah.
It's one of their very big sticky points. Now, aggregating all of the DOT opportunities so that people already have them in their system, and if you are doing any sort of AI estimation, you can already build them a bid capable of being submitted relatively quickly. Why I like your space is that these contractors are highly reliant not on unit cost but on productivity. Well, which is a byproduct which outputs the unit cost, and tracking productivity and having that historical rates over time is quite unique. And if you can track like, hey, with the financial tools, how do we perform on a productivity rate compared to what we were expecting? That's pretty powerful. Now, I imagine you say here for paving, there is a lot of contractors that are very interested in managing crews and productivity rates because this is how they think about construction. So are you looking at other trades?
Yeah, it's a great question. It's a question we've been asked since, basically since day one of when do we expand to other trades. As we see it right now, we see an incredible opportunity within the paving industry specifically. And we see an amazing opportunity to really focus on this industry and deliver a truly best-in-class solution, continue to deliver a best-in-class solution within the industry. And we're nowhere near tapping this out. And so, our playbook right now is charge forward within the paving industry and, really work to kind of build this ecosystem within the industry before necessarily jumping out to 3 other verticals and going and rinsing and repeating. So as we see it, we have opportunity to build a nice smaller business by taking exactly what we have right now, kind of going slightly more horizontal, right, and going across another few industries and building up small books of business. Or we see it as a larger opportunity to really verticalize here And then not until we feel like we have kind of fully built out that playbook of driving that full ecosystem play, take that and replicate it across other verticals.
Hey man, they build trillions of roads and highways overseas. So
yeah, not, you know, we're in the U.S. and Canada today. We have not spent time focusing on international beyond that, but it's certainly something that that we'll push forward on in the future.
Hey, Ari, I was refreshed to not see the single use. Well, you could correct me here, but I done a little bit of digging. Single use of the word AI on your website, but
Yeah,
obviously it must be in the plans, right? So I'm just curious, how does the platform develop as you start to collect more data and like the estimating, crew management, so on and so forth? Do we get into like AI predicted schedulings of crews, estimating, so on and so forth?
Yeah, absolutely. And right. I mean, I think what you preface there is a couple of the early things that we already are exploring is AI predictions of scheduling, predictive estimating, as well as there's a lot of kind of ease of use applications of AI as well, and especially as we think about crossing language barriers and things along those lines. Obviously, just thinking about in the US, a lot of folks out in the field are not native English speakers necessarily. And so helping bridge those gaps between field and office, there's a lot of interesting applications around that. And so there's a number of different ways. I mean, I think, you know, we like many others, you know, see voice as something that's really critical in AI, and especially thinking about construction. You know, the less you can have people having to try to type out on a small keyboard exactly what happened versus just being able to talk into their phone and provide an update, provide their job costing, you know, their actuals for the day, things along those lines through voice, we see as a huge opportunity for kind of really pushing things forward and just keeping things not only more efficient but also more accurate on that front. And so, you know, to your point, we're not necessarily an AI native company. We, you know, as we see it in the industry that we exist in, it's not an industry that kind of works super well for a truly AI native solution, right? I mean, we're talking about getting to very specific costs building up into an estimate for a project. And, you know, you want consistency there. You want repeatability and some more concrete and some more objective workflows within that. And so, you know, I think of it as we've gotten a bit lucky over the past few years of, you know, when we started this business, the AI world was not what it is today. And so we, you know, in a sense, we're forced to kind of build those more concrete workflows, those more objective workflows, and now have that as a backbone, as kind of the infrastructure of the overall platform that now we can layer AI onto, kind of with data that that is already in the system. And so I think it provides the right blend. That's kind of how I see AI in the construction world in general, is that it needs kind of objective infrastructure underlying it, but that AI piece can be layered on top for, you know, a lot of efficiency gains and to call out, you know, when certain things are out of the norm or maybe can be improved.
Cool. All right, Ari, thank you so much for coming. Good luck with OneCrew. Keep building.
All right. Don't try to sell the DOTs for a while. Like, that is not going to be a pleasant sales cycle.
Yeah. I appreciate it. Yeah, it's we'll call it exploratory for now.
Yeah.
It's a long ways out. Yeah. All right. Thanks so much,
I've
everyone.
had those conversations. They're not fun.
Yeah.
Good luck.
Thanks, man.
Take care.
good luck, man.
Very
There's
good.
nothing worse than trying to sell to the DOTs. Huge contracts, but oh my God.
Hey, we have
Hey, Britton.
another one.
Yeah, it going?
How's it going, Britton?
going well. Going really well. Patrick, Dustin,
Good.
good to see you guys again.
Britton?
Good to see you. Hey, I'm confused, man. You founded a new company, and yet I see the logo of your exit company up there.
Oh, yeah, never forget where you came from.
It's a very fundamental part of Britton's journey, building and selling M Suite to Stanley Black & Decker, which I would encourage people to check out the episode that we just released with Britton a few days ago, actually, on to learn a little bit more about that. But hey, Britton, we had a little bit of fun on WhatsApp earlier. It would have been your morning, my afternoon, about this story that I love to hear about your journey out of stealth. And you said to me, do you want me to tell it again? I'm like, yeah, I like to hear it for maybe the fourth or fifth time because it's such a great story. Or at least I found it. Maybe it's just my the way my brain works. But yeah, tell us, because I think this is a good piece of content for our audience. And Dustin and Patrick, if they haven't heard it.
Yeah, your own cruel humor. Well, so I was trying to be in stealth, and as new founders do, you apply for the various startup programs, AWS, Microsoft, etc. Well, Microsoft, since they bought LinkedIn, requires you to change your organization to the company that you're starting. Well, I had in that little stealth, organization for a few months. And so I changed it, and within 24 hours or somewhere around there of changing it, the guy Drake Dukes, who, Patrick, I'm sure you guys follow, Drake Dukes newsletter, he has this stealth startup thing that announces when founders come out of stealth. And he had a web scraper or something that saw my LinkedIn change and announced it. And I was like, what the hell? And this was within like a day of changing it. And I thought for sure that I would only have to change it for a day or two and then flip it back to stealth. And within that time period, I got blown up on LinkedIn and email and all, every way possible by a whole bunch of people at VCs looking for the next thing. And so I got a bunch of meetings out of it, which I had already raised the money. So that kind of sucked. But, I got outed.
Did it suck though? You didn't have to take all those meetings. You already had the money.
I did take them because I'm a glutton for punishment. But I didn't take them all. I took a good number of them though. And also, I probably am going to raise another round at some point or need to. So it's good to have a decent Rolodex of investors. So yeah. So that's how
it is true.
I got put out there.
But it is true. I mean, there's this joke, right? If you don't find much luck on the dating apps with not getting enough swipes, put Stealth Founder on LinkedIn. And you will get at least 50 VCs reaching out to you.
Yeah.
Wow.
It's very interesting. So next time,
great day and advice from Patrick.
Yeah, next time I'll learn to do that before raising money. But
make something up, right?
Yeah.
Cool. Okay, let's get to the business. So Britton, $3.3 million pre-seed round. Yeah, BuildFactory. So tell us a little bit more. Prefabricated construction marketplace. Why, what, how, who, when?
Yeah, so we talked about a little bit prior to this about the fact that I've done a bunch of research over the last few months, year probably, and really kind of learned a lot about what I did wrong the first time around. And one of the biggest things that stuck out to me from when I was at M-Suite was this pent-up capacity or pent-up demand as well in the prefabrication space. At any given moment, there's one fab shop that is slammed with 4 or 5 projects, and they're running 2 shifts or running overtime. 200 miles down the road, there's another fab shop that doesn't have any work at all. And so we're stitching together this network of fabricators. We have over 200 on the supply side right now. The interesting thing, though, because of what I just said, a lot of those suppliers are also buyers, right? Depending on where they're at with their own projects. So we're sort of seeding it right now on that side of things, and then going after what I call serial builders to fill the buy side. So data center builders like Google and Meta and so on, hospital and healthcare, and the HCAs and Kaiser Permanentes of the world that are looking for repeat access to quality prefab. So staged approach that we're doing. It's starting with the marketplace, but we're also building management software on the back end. So it is a full ecosystem, so that if you're buying from the marketplace, you have a place to manage those purchases. So you're not having to figure out how to manage 12 different, fab shops at once. And then if you're using the software we're building, it'll surface to you opportunities to buy fabrication if needed based on the project management software itself.
Britton, I actually think you're doing something that is very much needed.
Thank you.
In fact, some of the long-term things we've even talked about at Edify is bridging this gap, because a lot of optionality on what can be prefabbed or what might be available. The reason why it doesn't actually get specified or incorporated in plans is simply you don't know it's available.
Don't know what you
It's
don't know.
purely that.
Yeah.
Exactly. And so as we think about Precon and Edify, understanding what optionality, so maybe we can work together at some point. But I do think highlighting to the entire market, this is just talking about construction at the whole, of like what non-traditional sorts of assets are available or prefab optionality is available could help a lot. So
Well, and
I
one of
like
the
this.
things I learned at my previous organization was that prefab is defined differently throughout the entire life cycle of construction. To some people, it's, the new hotel that the entire room and bathroom went in as one unit. And to other people, it's as simple as cutting a piece of conduit and bending it to the right angle to be shipped out to the job site. Like, that's a very different definition of prefab. And so, one of the things we're doing right out of the gate is we've created a catalog where fabricators, contractors usually, are putting the things on there that they have standardized. So everything from duct banks on the electrical side to in-wall shower assemblies on the plumbing side to cloud ceiling panels that have full multi-trade in them on the framing side, and everything in between, bathroom pods, you name it. And I think, Dustin, to your point, part of the desire and benefit of that is that we're educating the industry of like, oh, I didn't realize I could specify an in-wall shower assembly, varying different materials and types that easily, or a carrier battery for a stadium project. These things are very easy to sort of plug and play. They don't need to be redesigned on every single project. So yeah, I definitely think there's an opportunity to work together on that.
I love that you're taking the supply view, by the way, when you evaluate that opportunity. I mean, my ears prop up when you speak about underutilized factories, Britton. I think that's a very important part of the opportunity that you're going after. If I were to tell you, not tell you, if I were to ask you, hey, how do you own your supply? Do you want to talk about that, or is that a secret?
I mean, it's not really a secret. You're talking about avoiding disintermediation, right? And keeping people from going around us. Is that what you're referring to?
No, it's more like what's the degree of ownership that you want to have over the supply? Perhaps that's a better way of framing it.
Well, we vet every fab shop that comes into the network, so we're keeping it pretty exclusive to start. And the reason for that is because we know that to start and do this, because it's not a thing yet, right? People don't buy prefab off a marketplace today, at least not frequently. Trust and quality has to be a huge part of it. I was very fortunate at M-Suite to have met and been in literally hundreds of fab shops across North America. And so I have sort of a pre-built network of those really high quality shops that have invested heavily in process optimization and, even as far down as robotics and quality control. So those are sort of tip of the spear when it comes to our owning of supply. But from a scalability perspective, we're working with companies out there that their sole job is prefabrication consulting. So we're working with them to help evaluate future fab shops for us so that we can continue to maintain that quality, but not have to do it all, myself.
Okay.
Does that answer your question?
It does. I have very specific follow-up questions, but I don't want to hog the conversation. Do we have like 5 minutes for a few nerdy ones?
You go for it.
Yes.
30 ones are the best.
I'll permit me to. I promise it's gonna be quite interesting. Let on the diligence of the factories. What's your philosophy? Is it better in the US that you diligence the products that they are able to serve? You mentioned standardization and repeatability. Or is it better that you diligence the processes that they are able to serve, but within these processes, then actually they can flip over to any kind of let's say production component, etc. What's the right method in the US market?
I believe in the process first, because what's interesting is on the product side is that aha moment hasn't hit all of these fab shops or construction companies. The idea of standardization is still somewhat foreign to a lot of them. And you'd be surprised. I'll show some extremely sophisticated fabricators an in-wall shower assembly catalog item. They're like, oh, we could do that. And it's like, yeah, you do it every day. You just haven't standardized it. So, from the quality of the shop, we look at what processes do they have in place? Do they have a focus on things like lean or other quality processes? Are they ISO 9001 certified? Have they invested in software and equipment like my old software or my competitor software? If they've invested in that, they're clearly a step above a lot of other ones. If they've invested in plasma cutters and automated machines like Tiger
You got it.
Saw or Razor Gauge, they're taking another step. So it's sort of a stair-step approach where we're tiering out the fabricators from an ultra premium, and standard level based on their investment in those things.
So the diligence then becomes the machine park. What kinds of processes can the machine serve? So you're going really, really granular in the end to understand the capabilities of each shop, and then that way actually route orders to them, which doesn't have to be necessarily what they have in the catalog today.
100%. So we have a full custom
Awesome.
fabrication part too. So if it's a plumbing contractor or a mechanical piping contractor or a duct contractor or an electrical contractor or one that does all of those, they're listing out their capabilities in our system when they sign up their company. And we do use an algorithm on our side to match the fabricators with the right purchases. So if a buyer comes in there and they drop in a Revit model, we can assess the Revit model and say, oh, this is all piping. And we know it's B31.1 piping, so it has to be X-ray. So we need to go to our contractors or fabricators who meet that quality standard of being able to do X-rays on their piping welds. Same goes for the rest of it. So it's at a very granular level, but the idea is to try to make that as frictionless as possible. On the fabricator side, they kind of set it up once. They can edit it or manage it as they grow and evolve their shop. But the idea is they set it up once. And then, on the buy side, they just say, hey, we're doing a project. Here's our bill of materials. It's ASME B31.3. And we can understand what that means using our algorithm to find the right fabricators or group of fabricators that make the most sense.
And then the supplier you're dealing with in the US, take out the top 20% of utilized and the bottom 20% of the utilized ones. If you take the middle 60%, what's currently roughly the utilization of these shops?
It varies every day. I mean, from a day-to-day basis to a week-to-week basis. When you're talking about construction, the interesting thing about the fabrication journey of even the most sophisticated, so excluding all the downstream that you mentioned, the most sophisticated fabricators are actually in the biggest capacity issues. And the reason why is because they've optimized their operations so much that their field demand can't possibly fill their ability to produce, or their capacity. So they can outperform their own field needs. And it's funny because the moment they get to that level of optimization, every one of them goes, well, who else can we fabricate for?
Yeah.
And so that's when they become sort of the friends and family network to be able to fabricate. But it always evolves as part of that journey. The brand new ones, no, they don't have a concept of their own capacity. They have two welders or two people banging out duct, and they do whatever they have to do, and they bring one more person in, or they send one person out to the field. It's not a manufacturing-like operation, but as they become more sophisticated, they get into that situation very fast.
Final one. What do you think would happen if you went to these middle 60%, which very spiky utilization, but if you average it out over the year, maybe they have 20-30% actually underutilization, and you went to them and you said, hey, I'm going to buy 10% utilization from you, but it's up to me how I market your capacity. What do you think would happen?
I think they would be interested in that, but that's not the business model is very, very different than that. So we're taking, are you familiar with a company called Xometry? Xometry?
Yep.
Xometry has an interesting business model where they have 11,000 manufacturing shops in their network. And I met with the CEO of almost 9 months ago now. And he told me something very interesting. They send out the order. So the buyer comes in, they drop in the Revit model in our case. They say, or we say it's $100,000 in fabrication, including shipping and materials and all that. We use our algorithm to match to the, let's say, 50 fabricators that make the most sense. The Xometry model is we send it to all 50. And they raise their hand, first come, first serve, as to who wants it. So we don't really care about their capacity. They're raising their hand to say, yes, we have capacity, or they let it go and say, no, we don't. So the question is, do we have enough suppliers to meet the liquidity of people coming in and buying? And the reality is, yeah, we do. With about 200 right now, we have enough for a while. But as I said, we'll grow that as we see demand for that. The great news is like there's no cost to be a supplier on the marketplace. So anyone wants to be it. It's just a matter of us vetting and making sure that they're of the quality we expect. Cool.
Dustin, you have a
Britton,
final
what's your
one?
definition of prefab? You said everyone has a different definition.
I had this conversation on LinkedIn, actually. There's a very academic definition, but for me, it's a strategy based on reducing cost or schedule by shifting the production of something into a manufacturing-like environment. Whether that's off-site or on-site or near-site, I don't really care. But it's the strategy of doing more off-site in a manufacturing or repeatable process that that can decrease the cost or increase the speed of your installation time. And what's interesting about that is that everyone kind of goes through the same journey there too. They try to figure out what makes sense to prefab. And it really depends on what type of work you do, right? If most of your work is high-rise residential and you're a plumber in Boston, guess what? You're cutting a lot of copper tube off-site. If it's industrial work and you're building power plants and ethanol or refineries, it's probably a lot of big bore piping that you're welding off in a fab shop. But if it's residential HVAC, you might be building duct on the job site, but in a repeatable fashion that helps save some time. So to me, it's just the strategy of doing it as a means to reducing costs or improving your productivity.
Britton,
Well said.
I got one last one, and you can only answer it in a very short sentence. Quick fire question. Key lesson as a second-time founder in the space.
Build for the user, not for the manager. That's my biggest one right now.
Anyone want to follow
build
up,
for
or
the
should we
doer.
leave it there?
Go for it. Yeah. What's the follow-up?
I was going to say, has anyone got one, or we'll leave it? I'm happy to leave it there. Enough said.
No, I think that's great.
Cool,
It's
Britton.
tough because the people who want to buy it aren't usually the users. So building for the users is important to hopefully generate the demand, and ultimately you want them to want to use it, not to be forced to use it. So that's my biggest takeaway from the first time around.
Nice. Thank you, Britton, for coming on. Good luck.
Thank you guys.
And we'll see
Thank
you
you.
around, I'm
Cool
sure.
opportunity,
Of
Britton.
course.
Mhm.
Thank you very much. Appreciate it, guys. Have a good one.
Take care, man. See you.
I feel like we've been getting some really interesting founders lately.
Yeah.
We're getting cool things.
Yeah, that's because Owen has this new algorithm looking for stealth founders.
Don't reveal the secrets.
I got to be honest. I never understood. This is just being kind of transparent. Why people would say I'm in stealth? Because most of the people I would talk to that said I'm in stealth, they came at it from the angle I'm worried about someone stealing that idea. I never have understood that. I truthfully think that if you're worried about someone stealing your idea, you are not the right person to execute on that idea. In today's age, though, if I were to start another company, I probably wouldn't tell anyone about it for a while, just because I don't want to have the bombardment. So there became there's a new justification for it.
It seems to be a little bit of a strategy now to build some hype around your startup as well. When people
Yeah.
see you're in stealth and then suddenly you come out, it's like, wow, he's here. So it could be a little bit of distribution in the early days.
I mean, it's true for capital raising purposes, especially if you try to get perhaps a little bit more of a raise around narrative and momentum rather than, whatever, substance. And when then the market, the capital market is extremely liquid, 2020, 2021, right now, yeah, it does help you achieve exactly that objective. So to your point, Dustin, I think that can be an objective that you can optimize for. But if that's not the one, yeah, I would also say the use of then or the benefits of using stealth, they are really limited because you're with your customers, you're not going to get away with that anyway. With talent a little bit, but most of your talent in the early days might actually come through introductions. I mean, correct me, Dustin, but like the first 5 people you hire, going to be introduced, right?
That's not the path I've ever taken, actually.
Oh, really? Oh, wow. That is fascinating.
No.
I've not heard that. I've always been told it's your close network.
Oh, no. It's my close network, but I thought you said something else, Patrick. It's through introductions.
No, exactly. So I was saying the same. So I was saying, hey, the first 5 people, either or they come from close people that you know. They come through
Everyone I know comes from.
That's 100%. What I mean.
Yeah.
So had you put stealth on LinkedIn, it wouldn't have made a difference because it was anyway curated and introduced, and they, what you wanted to chat to them. It doesn't matter what's put on LinkedIn or anywhere with regard to that. So I think it's VC methodology, nothing else.
That's fair. I guess I also came at it from the perspective, like the first time I did Building Connected, I didn't know anyone. So I was like, I need to do as much as I can to give people an idea of what I'm trying to do. And me putting stealth, like, who the hell is this guy coming from a general contractor? Like, I don't care that he's in stealth. It was way before construction tech was a thing.
Okay, talking of guests, next week we have DeVan coming from Open Space.
Open Space.
Yes, so that will be fun. And then the following
That should
week
be a long one. How much time does he got?
Here we go for 30 minutes. He's generous with his time. And I've done this thing on my calendar where it shows me like the active day and not my whole week, and it's completely disorientated me, so I don't know what day I'm on right now. But I know the following week we'll be at Autodesk University. Well, Dustin, you and I will be there. Patrick, you'll be in LA, right?
Next week, that is, though.
Next week. Are you joining?
Yeah. Sorry, the podcast?
Yes.
Well, if you'll excuse me, I'll be happy to.
You'll okay, fine, cool.
Are you guys doing a live stream from AU?
We should.
I'm down. Yeah, I was playing with my microphone, seeing how I could make it
I'll
work.
grab random people for a sit-down interview.
Dude, that would be awesome.
Yeah, that was what I was planning. I've got these.
We
mics
could grab customers and get their real-time feedback. So, are you underwhelmed or overwhelmed?
Not financial advice.
Not financial advice.
All right, let's
do
work
we have
on this.
Do we have a TikTok yet? We could just like TikTok individual customers. Hey, what do you think so far?
Yeah, never thought about that. Okay. All right, peeps. Thank you.
All right.
We'll see you next week.
See you guys.
Bricks, Bucks, and Bytes.